If you aren't already retired and rich, it can be very hard to know if you're on the right path in the first place, especially early on because it seems so far away. But guys, the good news is there are some signs that you are absolutely on the right path to being able to not just retire, but being able to retire and have a very wealthy life. And the more of these you have, the better the chances are that you're going to get there. So like the video if you want to be able to retire wealthy. And comment down below with other signs. If I didn't cover them all, I probably didn't get them all this time around, but comment down below with some of the signs you think when you see it, you know, hey, that person's going to retire and they're probably going to retire very wealthy. So first up, you live well below your means. Guys, this holds universally true regardless of where you're at, what income bracket you're in, or anything else. One of the early signs that I can tell that not only is this person going to be able to retire one day, now again, none of these are 100%, so don't take it as 100%. Everybody who lives below their means will be able to retire. I'm not saying that at all. You got to have a lot of the other factors as well. But one of the early signs, especially among young folks, is whenever you see somebody that's living significantly below their means. Meaning, if you make $100,000 a year and you're living on $75,000, well, you're doing pretty well. But think about this. If you run across somebody that's making $100,000 and they're living on $30,000, well, there's probably no doubt in your mind that that person's stacking away that money, investing that money somehow. And of course, that means they're probably going to be able to retire much earlier. Obviously, they need less to retire because they have less expenses, right? They make $100,000, but they're only spending $30,000. Their expenses are way lower. That's exactly what we teach in the blacklist there. That's why that program's so powerful and why it can happen so fast. Why you can retire within a year to 5 years is because you kind of flip the equation around upside down. And when that happens, all of a sudden, you see how quickly you can retire and how quickly the math and your assets and everything else stack up really, really fast. So one of the biggest indicators for if someone's going to be able to retire or not is that they're living below their means. Think about this. If you're living at your means or above your means, how the heck are you supposed to save for retirement? How in the world are you going to sustain that? More importantly, how are you going to build wealth? How are you going to invest? How are you going to do all the things that go along with being wealthy, with being rich? You can't do any of them if every single dime coming in is turning right around and going right back out. It is statistically and mathematically impossible to do. So you got to kind of think of some of those things like that and kind of think of the equation and break it down. Sometimes finding the simplest means, finding the simplest way to show what's going on there is actually some of the best ways to understand and indicate. You know, we get into all this fancy stuff, all these fancy charts and, oh, if I do this and I do this account and if you do this tax thing and all this other goofy crap like that. In the end, bottom line is you're living below your means, and the more you live below your means, the easier it's going to be to retire, the lower number you need in order to retire. And simultaneously, you also be able to build greater wealth over the long run. So it may seem simple, but in the end, it is one of the biggest indicators of if somebody's going to be able to retire and retire wealthy or not. Number two, you avoid the comparison trap. This kind of goes right along with living below your means. If you're simply looking for a car to get you from point A to point B as cheaply as possible, you know, you will be in a much better spot than the person who's comparing to their coworkers, to their neighbors, to their other family members. We've all experienced it before where you got something, you're really proud of your car, you really thought it was pretty cool, hey, I got a nice car, and then your friend or your coworker or a family member or somebody else gets that next level ride. They get that next level car and you're just like, oh man, that is pretty cool. Now all of a sudden you don't feel nearly as confident in your car as you do viewing their car because you're comparing. Same exact thing goes with houses. You can be perfectly happy, you love your house, everything's great, and then somebody else in a very similar situation as you buys a much larger house or maybe in a nicer neighborhood, or they have a brand new kitchen and you don't, and now all of a sudden you start comparing where you were just, you know, happy, satisfied over here before, but because you're comparing, all of a sudden all those things creep up in your mind and now you want what they have. And again, that turns into more expenses, more money put towards things that aren't towards building wealth, building your goals, and building towards retirement. And guys, it leaks into all areas of our lives. You're perfectly fine with your iPhone until somebody else gets the latest and greatest iPhone that can do whatever the heck iPhones can do nowadays. And all of a sudden now you want the newest one. Or clothing, you know, somebody else, you're perfectly happy with your Walmart specials, but somebody else gets this fancy brand. It looks really cool. And so now you got to have that brand too. And it just kind of goes on and on and on and on. Lots of different things, gadgets, cars, you know, clothes, shoes, whatever the case is. Even if you're seeing it on social media, that is still falling into the comparison trap because you're comparing yourself against that standard out there that social media has put out there, which by the way, guys, we all know, we still believe it. Maybe it's subconscious, but we all know People are faking their lives on social media, but yet we still go there and we still get that same feeling of, gosh, I need to do better. I need to level up, right? You hear that all the time. Level up your style, level up this, level up that. Well, the only leveling up I want to do is leveling up my bank account. That's the first thing. And then after that, I want to level up my health. I want to level up my asset base. I want to level up my brain, right? My knowledge base. You don't really hear people talking about a lot of those. You hear instead leveling up your haircut or your, whatever, you need that $100 haircut or your car or, your clothing, your wardrobe. And I'm not saying that there can't be some nuance into that may or may not help and may or may not translate into a lot of dollars. But typically that all goes way beyond anything that actually matters. Outside of that, takes money out of your pocket in the end. And instead you're just playing this comparison game. And before you know it, you're 40, 50, 60 years old and you've done nothing except keep up with the Joneses, even though you didn't intend to do that. That's what you end up doing in the end when you play the comparison game. So for me, when I see somebody that's not caught in that trap at all, I know that's a good sign that that person is on their way to retirement and being wealthy. Number 3, you don't fear risk, you calculate it. Now, this is something that I see in the blacklist there a little bit with the group members there, but not as much there as much as I do over stock group. I got an investing group over there in regards to stocks on my other channel there. And inevitably within that group, the biggest successful people aren't the ones who fear the risk, but they're the ones who calculate it, make moves, and then invest moving forward. All the folks that are busy playing the what if game, we've talked about that before. Oh, what about this? Well, that could be risky. That could be that could be this. Those right there are the folks that are letting fear dictate what actually will happen in the end and statistically what will happen in the end. Now, let me just kind of give you guys an example. When I was investing, I've been investing in real estate now for, it's got to be approaching 20 plus years now. Not as long as the stock market, but it's pretty darn close. And I couldn't tell you how many times, every single time kind of that average person was all about investing in real estate, it was the worst time to invest in real estate. And every single time it was the best time to invest in real estate, everybody was extremely fearful and wanted nothing to do with it. The reason why, in the end, is because they didn't calculate the risk and then mitigate it appropriately. When it's the hot new thing and everybody's saying do it, everybody wants to do it, despite the fact that anybody who actually calculated the risk knew, man, buying real estate in 2007 wasn't a good idea. There wasn't anything there. The numbers didn't match. Nothing made sense. When you're calculating the risk, instead of playing the fear game or the euphoria game on the other end, I guess I should have put that in there too. That right there was euphoria. You were very easily able to see the massive risk that was there, but that's when everybody wanted to invest, right? And then when it all cratered down and you were buying, basically properties 75% off or more in some cases, and oh, by the way, you had your choice. You could pick the best of the best, the creme de la creme, because nobody was wanting to buy because the risk was so high, despite the fact all the risk had been taken out of the asset. All the risk was out of the investment. That was the lowest risk time to buy, but yet people feared the risk instead of actually calculating it. Because if you calculated it, you would simply go, I'm stupid not to buy everything that I can. I'm just dumb for not doing that. The bigger risk is not buying. The same exact thing in 2022 when all the stocks cratered and you could buy incredible companies, like Meta in the 80s or, Nvidia, super stupid lows where it's basically 15x or whatever the heck it's done since then. And all kinds of other incredible companies, great stocks. It was dumb not to buy, but yet people were fearing the risk instead of actually calculating the risk. And if you would have calculated the risk, you would have seen it was a golden opportunity to double, triple, quadruple, 10x your money in a very, very short period of time. And that is exactly what happened. Don't fear the risk. You got to calculate it. When I see somebody that calculates risk instead of playing the what if game or the fear game or whatever the case is, I know that person's probably going to be able to retire and they're probably going to retire wealthy as well. Number 4, you believe money is abundant. This kind of goes along with the risk discussion we just had there. People either view money as finite, like very, very small. There's only so much. And, there just isn't any way for me to get any, or you view it as abundant and infinite. That's really the two camps that everybody falls into. And the abundant people inevitably tend to just find more money. More money tends to flow their way. More money hits their bank accounts. Their investments and their assets tend to grow. And the folks over here are just hanging on. They're just hanging on. And it's basically a mindset thing because they don't understand how money works in the first place. Money is created every single day. Governments print money. Banks print money. Individuals print money as well. Money is more than abundant. Money will always find a great investment, and investments, if they're good investments, always go up over time. Now, there's ups and downs, right? It's not a straight line. It's a roller coaster kind of. But millions upon millions, if not billions of dollars is created every single day. And it's not just created for some, it's created for investors. It's created for folks who are out there making things happen with their investments, who are expanding their minds, and who are out there creating opportunity. You're right. If you're talking about, hey, I work this job and maybe I'll get a raise, but the raise is only going to be this. Yeah, of course. But that's because you're just simply working a job and banking upon a raise in order to do that. But that's not indicative of the entire game of money in general. It's not indicative of the entire spectrum, and it's not indicative of the reality of the fact that money is created every single day over and over and over again across the entire world. When you start understanding that money is abundant and I just need to figure out how to get out there and get it. And it's not going to be by working a job. That's not how you're going to get to tap into the abundant flow of money. It's going to have to be in investments, in starting businesses, and a lot of other things of that nature. Once you understand that and you kind of key yourself that way, all of a sudden money just starts showing up and you're able to invest. You're able to continue to move the ball forward. And yeah, you're doing something different than the 99%. Remember, they're all over here. Everybody else is over here. You're over here playing a different game altogether, because when you understand money's abundant, all of a sudden you get away from all the traditional ways of viewing money and seeing where money comes from, and you're opened up to the entire world on the other side. Number 5, you routinely overcome obstacles. Again, this is another one where you can sit down with two people, give them the same exact situation, the same exact roadblock hits one of both of them at the same exact time, same circumstance, same tools, same everything. And one person will basically use that as a reason to basically shut down and not continue on the journey anymore. And the other person will figure out how to work around it, even if it takes a year, 2 years, whatever the case is. And then 5 years from then, they're further down the highway. Well, this person never left that spot in the first place and may have actually turned around and gone back home. That right there is the difference between somebody that is able to retire and become wealthy and somebody who basically stays in the same exact spot or actually regresses over time. And sadly, that's most people out there. So whenever I see somebody who encounters obstacles, and instead of the first instinct being like, see, I told you so, look what happened. What am I supposed to do now? I have no idea. When I see that person, I know that they're probably not going anywhere over the course of time. And they're going to be in the same spot 20 years from now that they are right now. And instead, when I see somebody else over here on the other side that sits back and goes, let me figure out how to get around this here. There's got to be a way. Let me figure this out. I know that person is probably going to be in a much better spot 20 years from now than they are right now. If you routinely come over obstacles, whether that's with your health, whether that's with your wealth, whatever the case is, you're a person who's demonstrating that you most likely will do all the things necessary in order to be able to retire and retire wealthy. Number 6, you are constantly learning. Now, guys, let me be very clear. I'm not talking about learning your team stats or your favorite players, likes and dislikes on social media or whatever the case is. I'm not talking about learning that. I'm talking about skills, expanding your mind, expanding what you understand about investments. If within your profession, are you getting the next certificate? Are you expanding into the next level or the next realm? Hey, maybe you have a, associate's degree right now, but a bachelor's degree would really allow you to move up to the next level. Are you working to get that bachelor's degree? Or maybe it requires a PhD in order where that's where the big money is. That's where, the big success is, maybe even the millions of dollars. What are you doing to get yourself there in the first place? That right there is what I mean by learning. Now, I'm not talking about watching a YouTube video or two and then thinking you know how to invest in 10x stocks. It's not what I'm talking about. I'm talking about somebody that comes in and actually learns how to do evaluation, how to do due diligence on a stock, how to actually set price targets, how to actually read company financials. That all takes weeks, if not months, to learn, and probably a year or two, maybe even more before you get really, really good at it. That's the reality. But when I see somebody that's willing to learn at that level, I know they're most likely going to be wealthy and be able to retire. Everybody else who just wants to put in a surface level video or, just watch a couple of YouTube videos, think they have it, or they just want to memorize their team stats or, favorite player stats or whatever the case is. Again, that person is probably less likely to be able to retire than not. Again, it's not 100%. None of these are 100%. But boy, I sure as heck am willing to bank on the person that's willing to learn how to actually invest, how to increase their income or whatever they're trying to do versus the other. Number 7, you buy assets instead of liabilities. Sadly, most people buy liabilities thinking that they're buying assets. That is the case. A lot of folks buy the car. Oh, hey, it's an investment. No, it's not. It's depreciating 20, 30, 40% as soon as you drive off the lot. It's not an investment unless you're buying investment grade vehicles. Then at that stage, we can have that talk. But if you're at that level, You probably aren't watching this channel anyways, trying to figure out how to retire early and trying to retire wealthy. Probably not the situation that you're in. So it's not an asset unless you turn it into something that pays you. That's how I define assets, is something that pays me in the end. If I have to pay into it, it's not an asset. A lot of folks justify overbuying on a house because they're buying an asset. Kind of, but you're paying for that asset every single month. Instead of buying that $500,000 dream home, why not buy a couple duplexes instead, to where at the end, after you've rented out everything, oh, and by the way, you're living in one of the units as well, you're not only living for free, you're getting paid to live there. So as opposed to one, you're paying, $2,500 to $3,000 a month into the mortgage. Doing it the other way, all of a sudden you might be netting $1,000 after everything's paid. So that's a $4,000 swing in terms of income in your pocket. That's big. That's $48,000 a year difference between the two. And I'm sorry, one is a positive, one is a negative. But when I see somebody who's routinely buying assets that pay them instead of liabilities that they have to pay for, boats, jet skis, I mean, you can get pretty ridiculous here pretty fast with a lot of these. I know that's an individual that is most likely going to be wealthy and be retired, and probably retired a lot earlier than most folks who may or may not be able to retire at all in the first place. And if you want to retire in 1 to 5 years on as little as $300,000, we have a step-by-step process for doing exactly that. We walk you through everything from what to invest in, housing, how to actually make it happen in the first place. Like, what's the math, where to go, 3 different ways of doing it, where you can stay right where you're at, or you can move overseas. Depending upon how, what suits your needs, we have a method to get you there, and a step-by-step process and coaching to go along with that. So make sure you check out the pinned comment for the blacklist and see if a membership there is right for you. Thanks for watching, and we'll see you in the next video.